Imagine waking up one morning and discovering that 20% of the world's oil supply may be trapped behind a single narrow waterway. That's exactly what the world is facing right now in the Strait of Hormuz. In the last few days, Donald Trump posted multiple warnings online, threatening massive military retaliation if Iran blocks the passage. At the same time, reports started spreading across social media claiming that Iran has already closed the strait, or that only Chinese and Russian ships are allowed through. So what's actually happening? Is the Strait of Hormuz really closed? Is Iran selectively blocking Western ships? And could this crisis push global oil prices to $200 per barrel? Today we're going to break down the real situation, the geopolitical strategy behind it, and what it means for the global economy. First, you need to understand why the Strait of Hormuz matters so much. This narrow waterway sits between Iran and Oman, connecting the Persian Gulf to the Arabian Sea. At its narrowest point, it's only about 33 kilometers wide. Yet through this tiny passage flows roughly 1/5 of the world's oil supply. Every day, massive oil tankers from countries like Saudi Arabia, Iraq, Kuwait, the United Arab Emirates must pass through this single corridor to reach global markets. If the Strait of Hormuz shuts down, the consequences are immediate. Global oil shortages, energy price spikes, stock market panic, inflation around the world. That's why analysts call it the most important oil choke point on Earth. The current crisis didn't start randomly. It began after U.S. and Israeli military strikes against Iran in late February 2026, which escalated into a wider regional conflict. In response, Iran issued warnings that ships should not pass through the Strait of Hormuz. Soon after, maritime insurance prices skyrocketed, shipping companies halted routes, and tanker traffic collapsed. Ship tracking data showed daily traffic dropping from over 130 vessels to just a handful. Even without a formal legal blockade, the strait became effectively closed because it was too dangerous to sail through. And then, things escalated even further. Over the past week, the situation turned from threats into real attacks. Several major developments happened almost simultaneously. Iranian forces reportedly laid naval mines in the strait. The U.S. military says it destroyed multiple Iranian mine-laying vessels. At least 3 commercial ships were struck by projectiles. These incidents triggered emergency warnings from navies across the region. Shipping companies began rerouting or canceling voyages because even a single mine could destroy a supertanker. As a result, many analysts now say the Strait of Hormuz is effectively closed, not by law, but by risk. This is where Donald Trump's tweets and posts enter the story. Trump warned Iran that if mines were placed in the Strait of Hormuz and not removed immediately, the United States would respond with military consequences never seen before. He also ordered the U.S. Navy to prepare escorts for oil tankers attempting to cross the strait. But despite these warnings, shipping traffic has not returned to normal. Many companies still consider the area too dangerous. Which brings us to the big questions circulating online. Some reports claim Iran is blocking Western ships while letting Chinese and Russian vessels pass. Interestingly, there is some truth behind this claim, but the reality is more complicated. During the early phase of the crisis, Iranian officials reportedly said the strait would remain closed only to ships connected to the United States, Israel, and their allies. A few cargo vessels that identified themselves as Chinese-owned ships were able to transit the strait. This aligns with geopolitics. China is currently the largest buyer of Iranian oil, purchasing roughly 1.25 million barrels per day. So Iran has a strong incentive to keep that oil flowing. However, recent shipping data suggests even Chinese vessels are struggling to pass safely because the entire area is now considered a conflict zone. So the strait isn't fully open to anyone, it's just less restricted for Iran's partners.
Another surprising detail,
Not all oil exports have stopped. Reports show Iran's own oil shipments are still moving through the strait, while exports from other Gulf countries have dropped dramatically. In other words, Iran has created a situation where rival countries struggle to export oil, Iran's own shipments continue, and global prices rise. That combination gives Iran enormous economic leverage, and it's already affecting the global market. Because of the crisis, oil prices have surged. At one point this week, crude oil spiked to nearly $120 per barrel, sending shockwaves through global markets. Some analysts warn that if the strait remains blocked for months, prices could reach $150 to $200 per barrel. That would trigger global inflation, higher fuel prices, and economic slowdowns worldwide. Even governments are preparing emergency plans. Countries are discussing releasing strategic oil reserves to stabilize markets. Right now, the future of the Strait of Hormuz depends on three possible scenarios. Scenario 1. U.S. naval convoys reopen the route. The U.S. Navy could escort tankers through the strait, similar to what happened during the 1980s tanker war. Scenario 2. Iran escalates further. Iran could expand attacks on shipping or ports across the Gulf. Scenario 3. Diplomatic negotiations. Global pressure might push both sides toward negotiations before the crisis spirals further. But until one of these happens, the Strait of Hormuz remains one of the most dangerous shipping lanes in the world.
One semi-official